that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. Stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. All right. Hey, Commitment to Traders Report. Here we are. Forex Today. Forex Today. Commitment to Traders Report specifically because this isn't the complete report. You have to break it down to the information that you want. We're looking at non-hedging FX open positions. This is money in the market. This isn't sentiment. This isn't opinion. I think the euro is going to go down. This is money in the market by large institutional investors that are in the market to make money. They're not hedgers. That's why we got to look at non-hedging. So, for example, let's say you're in the wheat market and you make breakfast cereal. You kind of need wheat and you need corn, all right? Because you need to make breakfast cereal. You're going to produce this thing, and that's how you make your money. So what are you worried about prices? Are you worried about prices falling in the cash market, the underlying wheat price or underlying corn price? Or are you worried about prices going up? Because you're going to buy at any price, right? What if prices for wheat go too high and you say, well, I'm not going to buy wheat at these prices? What do? Shut your factory down? Right? You got to buy at any price. If it doubles, you got to buy wheat or go out of business because you don't do anything else, right? So you're worried about prices going up. And so the market works differently than maybe like a speculator, right? So what happens when wheat prices fall? A company that makes breakfast cereal buys more. Its prices are falling. Buy. You'll figure it out. You'll store it somewhere once you take delivery, or you buy future contracts way out there that takes delivery, 6, 9, maybe 9 months from now, you'll take your delivery and you'll pay a carrying charge for that. But whatever, you buy as prices go down. But you're worried, well, what if prices go up? So you're long the futures contract, but you're short price. You're short the cash, long the futures. And what that means, if prices do go up, you're going to lose your money because you have to pay more cash for the same thing, so you're losing. But you're making money as prices go up on your futures contract, and the profits you're making on in the futures market will offset partially or totally, depending on the contract size, the losses in the cash, and it should all work out at the same price anyways. That's called hedging. So what we need to do is filter those guys out because there could be very, 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 very large hedged positions. Okay? And think about it. If you do $1 billion a year in wheat and corn purchases because you produce breakfast cereal for the entire nation of the United States of America, wow, you must have huge contracts for hedging, right? Okay. Yeah, okay, we'll go through that, John. So anyways, we're looking at money in the market, and this is a snapshot of Tuesday. Okay? This is a snapshot of Tuesday, and this information was released at the end of at the close of the market on Friday. So here it is Monday morning. It's pretty new. It's pretty new information, right? So let me get my drawing tool so maybe I can just draw on it a little easier, point things out a little easier. One moment, please. Un momento, por favor. Muy bien. Okay. So first thing, let's test this out. Make sure it's drawing. All right. Okay, we're looking at Euro USD. De nada. All right. All right. So yeah. All right. So here we are, Euro. Okay, Euro. Are people long or short the euro? First thing you want to look at is this area here is the gray line. Okay, These are actual contracts, okay? The actual contracts, and here's the number on this axis here, okay? The actual contracts, and each little dot is year over year. Or sorry, year over year, sorry. Week over week. They are weekly dots. They're like little weekly candles, right? And how would you describe the market here over the last, since August? Is it up, down, or sideways? Yeah. And what we're looking at in particular in this report is this in here, the change from one week to the other. Now, keep in mind, this is before the ECB meeting and before non-farm payrolls. So you can see nothing's changed, right? So next week is going to be particularly interesting because then we'll have that data, okay? But just maybe this is just a lesson on how to use this report on Forex.today, right? So week over week, absolutely nothing, right? Now to contrast this, we want to look here. Short positions is in sort of a golden color. Short, okay? Short. Look at this. This is in contrast. So if this is going up, these are short contracts. The number of contracts that are bearish. So the number of bears in the market is increasing quite dramatically. And then in particular, what we're looking at is the change, the recent change. And that looks like a 45 degrees, right? That looks like 45 degrees to me. More bears have entered the market. At the same time, nobody bought the euro. More people sold, nobody bought. So the next thing that we're going to look at is the net. Add them together, the longs and the shorts, right? And that gives you a black line. And that shows us down, 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 down. And the break-even point is right here at 0. Okay, so this is our water line. And the market is way underwater. The market is heavily net short, is the terminology. Okay? And then the last thing you can look at is the red line, and the red line is actually the price. So when this report was produced, right, remember this is Tuesday of last week, this line here, that's price. We were down here around 105. So this is the number of contracts over here. This is the date over here, the week, right? And then this other axis is price. Okay, so now what we know has happened, which is not reflected in this report yet, it'll be next week, is that we went like up to about here, and then we're trying to head back down. What we're going to look at is the significant change in shorts, the significant change in longs. And do you want me to predict the future? I'll try to predict the future here for you, right here, right now. What you're going to see is Euro USD jumped almost 500 pips. Okay? You're going to see a dramatic change in shorts. So this is going to fall. And you know what? Nothing's going to happen here. You are not going to see a change in long positions. And we saw this in the past, where the Euro USD did go up, right? Sort of like this area, and nobody bought it. But the shorts were diminishing, okay? So we're going to get that again, is what I'm predicting. Nobody bought it, yet Euro USD skyrocketed. Nobody bought it, but Euro USD skyrocketed. And this is why we look at the Commitment of Traders report, because you need to know whether the market truly is bullish, regardless of whether price is going up or not. Price could go up hundreds and hundreds and hundreds of pips. It's now done it at least twice this year. This year, that the euro dollar was up hundreds of pips and nobody bought it. And as a newer retail trader, let's say, or an amateur trader, you got to get your head around that and understand it, because what happened last time is I prepared you for weeks and weeks and weeks that we watched it week after week after week, and I said, get ready because no one's buying it, so it's going to fall. You got to be ready. You got to be ready. When it falls, it's going to fall hard, and boom. Okay? Again, no one bought it. Everybody sold it. Booyah. Okay? Cool, right? Anybody new to this report? I know a couple people asked questions. John, maybe? Okay, and that's the point I wanted to make. You know, this trade, it's a or this information is market information. And I don't want you to be distracted by pure price, because you're like, oh, price is moving up fast. It's been up for days. It's been up for a couple of weeks. Everybody's buying it. And that's not necessarily the case. Okay, so Perk says, so now's a good time to short because nothing's changed here. Well, I don't have new data. Okay, I'm only predicting that's what's happened. Now, let me make a point here. Obviously, someone did buy the Euro USD, right? Maybe you did. It went up, and maybe you scalped it on the short term, right? Maybe you're in it for a day. Maybe you made 300 pips on there. Is that going to be in next week's Commitment of Traders report? No, because you're in and out of the market. It's not going to be reported as a position because you're not in the market anymore, most likely. Now, if you held it for a week and you were long for a week, it probably will be reported, right? Yeah, not your micro lot, but anyways, this is large institutional positions. These are big contracts, guys. Well, Chubba, we'll look at technicals a little bit later today, okay? Oops. Let's do pig, sorry, Great British Pound. Okay. And I'll go through these a lot faster now that you have the basic idea. Okay. The market is net short. We got to neutral, which was interesting. We were neutral for a long time. Then the market sold off the Great British Pound. And there was a small blip up, but I wouldn't call that bullish yet. What created that? No one got out of the shorts, but someone did buy it. You see, these are long positions. So the short positions, yeah, you know, there was actually a little bit of an increase in the number of shorts. So there are bears, and there's a little bit more bears than there used to be, but significantly more bulls week over week. And so that's why you get a blip. And interesting enough, though, price still fell. Well, maybe it'll print a change here, right, over the next few weeks. So we'll see. It's one of those things like, I wouldn't call that a bottom, but let's eyeball it, huh? Yen. Any change in the yen? No. No, not really. Okay. Remember back here, I said the strategy was, you know, buy it at 22, buy it at 21, buy it at, 120, if you can. And I think it did drop to, what, 21? No, 22. It dropped to 22, and we're back at 23.50. So again, we're right back to where we were. So that's good. No dramatic change in yen. Swiss franc. Market is heavily net short Swiss franc. Cool. Okay. Nobody buying it. Nobody, right? No change at all. More and more and more and more and more and more people selling it. Cool. Okay. Oh, and the price is USD Swiss franc. That's why it's going up, which shows weakness in the Swiss franc, not strength. Okay. Aussie. Aussie. All right. Look, some big improvements here. Market was net short and is trying to improve, moving back toward the waterline. Small increase in price. That's the red line. Okay. Look at almost no change in longs, but dramatically less less number of bears. Okay. Bears got out. Bulls have not got in yet. Well, that's an interesting, insight onto the psychology of the market, isn't it? I mean, seriously, isn't this very, very interesting information? This is Aussie. I mean, this is incredible to know the psychology of the market, right? Now you can say, oh, yeah, well, there's been a nice bounce in Aussie, but one of the things I'm looking for is actually a bullish move. All we know right now is people are uncertain about the downside, so that they're getting out. Right? They're squeezed out. This is a short squeeze. I mean, right? It's slightly old, but I wouldn't say dramatically old. I mean, we're talking about Tuesday, man. Right? Yeah, as of Tuesday. Well, but the world's changed since Tuesday. Yeah, probably not. Not on this pair. On Euro, maybe. Okay? But I wouldn't say this is going to be dramatically different. Right? So, for example, look at the price. 72.25. Oh, wait, we're at 72.77. So we're right here now. You're like, oh, yeah, but it's a week old. Okay, let me update the chart for you. We're here now. I can't even draw the line. It's so small. There we go. Update. Whoop, whoop. Now it's good. Now you can trust the data. All right, cool. How about the Kiwi dog? Kiwi, increase in price. Okay, decrease in bears. I'd just say no. I mean, just slightly more bulls. But the thing with the bulls is this: it's slight, but week over week over week over week over week over week. I mean, this has been going up since October. Then a slight pullback, and then it was going up since September. So, we have an increase, Fibonacci retracement, and then, yeah. So it's been, the bulls have been tiptoeing in. There's been a lot of bears, but look at the bearish market actually peaked in, the last week of June, first week of July. And the bears have been coming out of Kiwi since July. Okay, so look at the crossover right here. More bullish contracts than the bearish contracts. And they're pretty close now, and this is why we're near the water line. That's why you look at the water line, and this is why you look at the net. The net market is net long Kiwi dollar, but not by much. But maybe this is the beginning of a beautiful trend. If they cut interest rates, well, that's not bullish. So that's why we need to pay attention this week. Okay? And then Kitty Cad. Okay, Kitty Cad. Net change, none. Okay. A lot less people long. See, we've gone a month without new buyers. In fact, every week for the last month, we have less buyers. We've had a lot of bears, sell, 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 sell. Then they took their profit, and then what? I think what we're going to see is the yellow line goes up more. And I think you'll see there was a blip of some CAD bulls, but I think that'll only be a blip, and then we head back down again 2 weeks from now. Okay? Hey, Kip, did you get it working? Kip says, I think Kip's the one that had the iPhone. But Kip says, have a bunch to learn, huh? Well, I'll be here tomorrow. Why don't you swing on by and ask some questions? Okay, and if I was going to do a video on a currency pair, let's say I just did one. Okay, let's say I just did one currency pair today. What would your vote be for a currency pair? Pound CAD, Euro dollar, Aussie dollar, Kiwi, Aussie pound. Well, you know what? I'm going to do Euro dollar, I guess, just because of the big move after non-farm payrolls, and I think a lot of people are interested in getting back short. Um, maybe I'll do another one, but let's just do that. So I'll shut this video off, and then I'll make a new one specifically on technical analysis and the Euro USD, following up the ECB meeting and the non-farm payrolls meeting. What do you stink? Smell like a plan?